Over in the oil market, prices rose in early trade on the hope of a strong global demand. This comes amid geopolitical factors that weigh on the market and high hopes of a rate cut coming soon from the world's strongest economy, the U.S. RMB senior commodities trader Raymond Phillips joins us now with his analysis. Thank you so much for your time, Ray. Let's actually start off with a sentiment around the U.S. inflation figure. Of course, inflation still remains sticky, hovering above that 3% level in the U.S., came out slightly higher than what markets had anticipated. Of course, inflation remaining sticky is not a good thing. How did the oil market actually digest this?
Well, it actually was pretty muted, to be honest. There was no real impact from the oil market post that US CPI print. Quite surprising, because I'd say over the last 6 months, any sort of macro event or macro data point like that typically does move the oil market quite a bit. Perhaps this is a lag effect, because if we're talking about a rally in oil, it's definitely happening today.
Yeah, all right. Well, actually, what is responsible for that rally?
Look, there's a few things that have been attributed to this rally. I think the main one, though, in news media at the moment is the drone attacks on Russian oil infrastructure, more specifically the refineries. I believe that it's been 2 nights in a row, so obviously that's a bit of a supply concern for traders at the moment.
Yeah.
Definitely here in the mid-afternoon, we've definitely seen some more buying activity coming through in oil products.
Well, actually, just talking about supply, because OPEC is still in its production cutting cycle. And considering the fact that there is an expectation for global demand to grow, as we heard from OPEC, could we get to a point of an oil deficit?
Well, look, OPEC did meet recently, and they, as you correctly say, extended their cuts through to the second quarter. I think some news came out that not everyone's been able to meet their output quotas just quite yet. I think Iraq were one of the members that actually produced more oil than the quota specified. With regards to a deficit, it's quite hard to say whether it will come into play. Most commentary out there suggests that OPEC will sort of keep an eye on the market, keep an idea on what's going on with the supply-demand dynamics, and potentially phase out their output curbs come the second half of this year.
All right. And I'm just actually thinking now, because, you say that, I mean, they could unwind, or there's a chance that they don't. And I'm wondering, in terms of supply and this growing demand, if OPEC has no worries about production increase in non-OPEC countries?
Well, look, I guess, talking about that, the real surprise was at the tail end of last year, where I think a lot of people sort of forgot that the US are the biggest producers of crude oil in the world, and they came out with a record high production level. That has been slightly muted come the start of this year. A few factors at play there. It was very cold in the US at the start of the year, so guys were maybe attributing the muted US production to that event. But post that, it hasn't really recovered or seen new record highs from that perspective. But I think, OPEC's going to keep an eye on this non-OPEC production. Right now, it seems pretty finely balanced, if I'm being honest. I think we have to see a bit more with regards to oil inventories and the like over the next few weeks to actually get a gauge on whether there will be a deficit or not.
And actually, just, as we were talking about, this, supply side and also the geopolitical situation, you mentioned Russia, the Suez Canal. How closely are you guys watching that? And actually, how has the impact been on the oil market so far?
So that's been more of an oil product markets impact, if you're talking about the Suez Canal and the Red Sea sort of region. Of course, there is a bit of a risk premium that does seem to be prevalent in both crude as well as diesel and gasoline markets. It's something we monitor quite a bit, but I think we're kind of reaching a stage now where the market seems to be digesting it a bit better than before. Of course, it still remains a big risk factor. At any point in time, we could see a flare up there, and of course, that would be bullish for oil prices in general.
Yeah. And of course, on the demand side, China is pretty important. I'm wondering what signals you're getting there on the outlook for demand in China for oil.
Well, look, on balance, I think Chinese data has been a little bit softer than expected. The other factors at play, I know that Chinese authorities are trying to shore up the economy with a bit of stimulus. However, I would say that stimulus seems very focused on sort of, let's say, green industries, renewable industries. So more something that you sort of look at if we're talking about commodities, bullish for copper. With regards to things like oil and oil products, I think the things you'd like to see more is data on travel, business activity in general from the likes of China to really get a gauge on if demand is, reviving in that jurisdiction going forward.
All right. Well, thank you so much for your time and for your insights today, Ray. Really appreciate it. That was RMB Senior Commodities Trader Raymond Phillips.